Imagine you're selling a house or a business and there's 10 buyers, but 2 of them cannot buy it. They are not allowed to buy it. Another 2 don't want to buy it. Another 2 don't realize it's a good deal. And another 2 have absolutely no idea that the house or business is for sale. What do you have left? Well, out of 10 possible buyers, you only have 2 that are left. Under such scenario, are you going to get a good price for it? Well, no, because this is simply supply and demand. You have the supply, but the demand is pretty weak, isn't it? You only have 2 out of 10 that can possibly buy. And those 2 barely have anybody to outbid them or compete with them for whatever it is that you're selling. This is pretty bad news if you're the seller. But if you're the buyer, this is exactly the kind of scenario that you want. This pretty much describes LEEF Brands stock. Institutions or hedge funds cannot buy it. It's a forbidden stock for them because federally, cannabis is not legal in the United States, at least not yet. Hedge funds or institutions can buy Canadian cannabis stocks that trade on NASDAQ and New York Stock Exchange or US exchanges. They can buy those, but they cannot buy US cannabis stocks. Number 2, most investors have absolutely no idea that LEEF Brands even exists. Again, because cannabis is federally illegal in the United States, LEEF Brands has to trade on Canadian Securities Exchange instead of NASDAQ or New York Stock Exchange. Consequently, most investors won't even look at it. And that's kind of ridiculous. Think about it. Canadian cannabis companies can trade in the US, but US cannabis companies cannot trade in the US. So where do they trade? In Canada. And number 3, even the people that have heard of LEEF Brands have absolutely no idea or have done zero due diligence as to why buying this stock might be a pretty good idea. Now, in this video, I'm going to tell you how we can make money on LEEF Brands stock with federal legalization in the United States and without. I mean, with federal legalization, this thing and all of the other cannabis stocks, I mean, they're just going to go to the moon. But we don't need federal legalization in order for LEEF Brands to make a lot of money for its investors. But before I can tell you how we can make money on this stock, first I have to spend a few minutes describing the business. LEEF Brands is a US cannabis company right now operating only in California. In the future, it will likely expand to other states. LEEF Brands trades on Canadian Securities Exchange with a ticker symbol of LEEF and on OTC with a ticker symbol of LEEEF. When we think about cannabis companies, we think about smoking cannabis. And the cannabis companies are really divided into 2, the flower side and the extract side. So the flower side is what everybody thinks about, smoking it. But LEEF operates in the other part, extracts. So when you have a cannabis plant, you can extract the properties from the cannabis plant, and you can use this and infuse it into other products, whether it is gummies or some kind of creams for healing, whether it is to put it into drinks or to put it into vape cartridges. These are extracts, and this is what LEEF Brands does. It has 3 extraction lines: ethanol, solventless, and hydrocarbon. So the actual products that LEEF sells look like this. They are extracts. They are the ingredients that other companies use to make the finished product, whether it's gummies or creams or drinks or whatever it is that the finished product is. And LEEF Brands powers the top of the top extraction brands in California. So you might recognize some of the names when you go into a cannabis dispensary, but you might not realize that LEEF Brands is what powers those brands by selling them the extract ingredients to make the finished product. LEEF Brands also owns one dispensary in Palm Desert, California, but the majority of the business is the extraction business. So now the most important part. How do we make money on LEEF Brands? And as I said before, two ways. One way when it becomes legal, and one way is without it being legal. So on the legal part, it really doesn't take a genius. When US makes cannabis legal, all the cannabis stocks are going to go to the moon, including LEEF Brands, and especially LEEF Brands because of California. California has the brand an advantage where it comes to cannabis. So when they allow interstate commerce, everybody will want to buy from California. And LEEF Brands is the best in the extraction business in California, and therefore the best in the whole United States. It's really that simple. I don't want to spend too much time on it, and some people might say, well, what if pharmaceutical companies get into cannabis? If it's legal, companies like LEEF Brands are simply going to get acquired for a lot of money because it's a lot simpler to buy the knowledge and the processes than recreate it from scratch. So I'm not going to spend much time on it. If it's legal, this thing goes to the moon.
As we legalize it throughout the country, whether that's a good thing or a bad thing, it's awfully hard to have people all over the jails that are in jail right now for something that's legal.
Now, while politicians will tell you anything you want to hear just to get elected, we're not going to count on politicians in order to make money, right? So in other words, we need to make sure that we have a way to make money without them making cannabis legal. And if you look at the chart of Grown Rock International and Glasshouse Brands, what you will see is that both of these companies had tremendous returns on their stock. Look at this. Grown Rock International went from 7 cents to now almost $1, delivering 1,300% return for its investors. Glasshouse is just in California, but on the flower side. LEEF Brands is on the extract side. But Glasshouse went from less than $2 of a stock to now $7. In other words, 270% return on the stock. And cannabis is not legal. Why? Because they fundamentally delivered and then they're making money. And what do I mean by fundamentally delivered? Investors are not going to assign high valuations to companies that don't make money, don't have good margins, are not growing. So if we look at Grown Rock International, look what they have. Growth. And they also have margins. Look at Glasshouse, same thing. Growth and margins. It wasn't always like this for Glasshouse. Glasshouse had really bad margins, 25%, 24%, and then they went to 50%. And as a result of gross profit margin going to over 50%, look what happened to EBITDA. It went from negative 12 million, negative 22 million to positive 24.5 million. As a result of this, the stock market rewarded Glass House, and now it's trading at multiple times revenues. Glass House is trading for about 4 times revenues, and Grown Rogue International, which has a market cap of 200 million on revenues of only 20 million, so it's trading at 10 times revenues. Grown Rogue International has lower revenues than LEEF Brands. LEEF Brands currently has revenues of about $30 million per year, and it's trading at less than 1 times revenues. What's the problem? What the problem is that LEEF Brands revenues are not growing, and LEEF Brands gross profit margins are in the neighborhood of something like 30%, which means that EBITDA is just neutral. And until LEEF Brands grows revenues, improves margins, and significantly shows positive EBITDA, the market is not going to reward it with a higher valuation. So now, these are the problems that LEEF has. How does LEEF is going to address it? And the answer is its own farm. Look at this beauty. This farm is absolutely transformational for LEEF Brands, because up to this point, in order for LEEF Brands to produce its product, which is the extract, it had to source the cannabis flower from 300 farms. So it had to buy it from somebody else. And it was costing the company anywhere between $20 to $30 per pound. With this farm, they will be able to produce a pound for their extraction business for less than $10 per pound. This is absolutely transformational. Look at how it will translate into margins. On 30 million of revenues, the cost of sales at $25 per pound is 20 millions, resulting in a gross profit of 10 million. With $15 per pound, not 10 that they'll be able to do, but $15 per pound, that cost of sales dropped to 12 million, making gross profit 18 million and gross profit margin of 60%. This is a game changer, because now, instead of having EBITDA neutral, the company will be able to be significantly profitable on EBITDA basis. Also, this farm will allow them to grow specifically for the extraction lines, which will increase the yield. Because again, previously they had to buy the flower that was grown for various different purposes. It was not grown specifically for the extraction business. Now they will be able to grow specifically for the extraction business, which will increase the margins even more. Also, finally, this farm, which will come online in 2025, will finally allow LEEF Brands to grow revenues. So all of the reasons why LEEF Brands is undervalued will be solved with their own farm. Revenue growth, margins, and profitability. Finally, this might come as a surprise to you, but LEEF Brands is becoming the first cannabis company to put Bitcoin on its balance sheet. Yes, LEEF Brands is initiating a similar strategy to MicroStrategy or Michael Saylor by putting Bitcoin on its balance sheet. So with that being said, thank you for watching this video. I suggest you go to the link below to watch my full 1-hour video on LEEF Brands. With that being said, please do your due diligence. Don't just listen to me. You have to do your own due diligence and decide on your own if LEEF Brands is something that should be part of your portfolio. Hopefully you will come to the same conclusion that the upside on this stock is absolutely humongous, but also that there is some margin of safety because the value of the farm at this point exceeds the market cap of the entire company.